Evening, guys. Myself, Shweta Sandasani. I am a qualified chartered accountant and company secretary by profession. I cleared my CA in the year 2012. Apart from that, side by side, I was pursuing for my CS. Unfortunately, I got my degree in the year 2015. Thereafter, I came in association with different corporate sectors, that is service sector industry, where I worked for totally 5 years. And apart from that, I was also keen in teaching to the students for BBA, MBA, CA, and CS, and MCOM and BCom students who keen to pursue with me the classes. So as I love to teach, so right now I'm associated in that also. So it can be said that teaching is has now become my passion. So that is why I'm keen interested to do that. Right now, I'm preparing this small demo lecture on the goods and service tax, where I would be taking the coverage of different topics like what is GST, that is, it will include the definition of GST and the coverage of different components of GST, why it is levied, how it is levied, what is the impact of GST on different taxes when it was implemented in India, and the impact on the economy also. So to start with, first of all, I'm taking the definition, basic definition of goods and service tax. As you must be aware that the short form for goods and service tax is GST and the full form is goods and service tax. Obviously, it is an indirect tax which has replaced many indirect taxes in India. As earlier, before implementation of GST, there were different taxes like value added tax, excise duty, service tax, and VAT, of course. The Goods and Service Tax Act was passed by Parliament in March 2017 and came into force on 1st July 2017. In other words, I can say that the goods and service tax is levied on the supply of goods and services. Goods and service tax law in India is comprehensive, multi-stage, and destination based tax, which is levied on each and every value addition. Note, very important point, why I am telling destination based tax, because it is a tax levied on the destination in which the goods are to be consumed. Like if a dealer of Gujarat is selling goods to a dealer in Karnataka, and the consumer, of course, who is consuming the goods is residing in Karnataka, so GST would be levied at the point of supply in Karnataka, and the entire revenue of that state would go to the Karnataka government because the consumer is residing in Karnataka. That is why it is known as destination based tax. As GST is a multi stage tax because it is going through multiple stages of hands along its supply chain, starting from the manufacturer until the final sale to the consumer. So what is a destination based, I have already explained you, because this is a very important concept of GST which can come in the exams also to write, that explain the destination based tax which is in the nature of GST. So why it is known as destination based tax, because at the point of sale it is levied and in the state in which the consumption takes place. Okay, all right. So moving to my further topic, after implementation of GST, what are the benefits of GST? It has removed, first of all, the main point is cascading effect on goods and services. Cascading effect on goods and services basically means taxes on taxes. Like taxes on taxes have now been removed, so the consumers are in the benefit. Like it has decreased the cost of goods and services, which has reduced the cost of goods and services. Like product is now becoming very cheap for the consumer after the implementation of GST, because it has removed all the taxes on taxes. So now again moving forward, there are three different components for GST which are very important for you to understand, because without making a basic understanding of these topics, I won't be able to cover like different practical concepts for GST, because the practical illustrations which are asked are based upon these different three components. So first component is Central Goods and Service Tax, short form is CGST. Second component is State Goods and Service Tax, the short form is SGST. And third is Integrated Goods and Service Tax, the short form is IGST. Now what are these three? One by one I'll be discussing with you. First is Central Goods and Service Tax. What is Central Goods and Service Tax? As the name itself suggests, it is collected by the central government on intrastate supply of goods and services. Now one more concept is coming from here. Intrastate supply of goods and services. Now, what is intrastate supply of goods and services? First, we will understand this, then we will move to these components. There are basically two different terms associated in GST: intrastate supply of goods and services, and second is interstate supply of goods and services. What is intrastate supply of goods and services? Like, whenever the dealer is associated in transactions of goods and services, like he is situated in Karnataka and making the transactions of goods and services in Karnataka itself, it will be treated as intrastate supply of goods and services. That is, the transaction is being made in the same state. Now, interstate supply of goods and services, dealer is of Gujarat, making the sale transaction from Gujarat, but the point of supply is Punjab. Now, there are involvement of two states. As two states are being involved, it will be a transaction of interstate supply of goods and services. So, one most necessary important component for interstate supply, that there must be involvement of two states, and in intrastate supply there is only one state. So that is why it is known as intrastate and the other is known as interstate. Now, CGST and SGST are levied on intrastate supply of goods and services, and CGST is collected by the central government and SGST is collected by the state government. IGST will again be collected by the central government, but it is a transaction on interstate supply of goods and services, where the transaction of sale is being made from one state to another, but in case of intrastate, the transaction is being made only in the same state. Alright, I hope so. Till here it has been made clear to you. Now, moving further, I am explaining you these three components with the help of an illustration, or you can say it as an example. Like illustration is, now let us assume the dealer is of Gujarat and have sold the goods to a dealer in Punjab worth rupees 50,000. Now, first from this illustration, you need to understand the involvement of two different states are there, Gujarat and Punjab. So, of course, as there are two different states, the transaction nature would be interstate supply of goods and services, as the dealing is made in two different states. So, IGST would be levied on such sale, and IGST rate is at the rate of 18%, we can say it as. So, on 50,000, 18% makes it to rupees 9,000. So, 9,000 revenue will go to the central government, and IGST would be levied because it has been collected by the central government cost. Okay, now reversing back to this, suppose the same dealer has sold the goods to a consumer in Gujarat worth rupees 50,000. That is, dealer is of Gujarat and sold the goods in Gujarat itself. Now, the CGST and SGST role plays here, because the transactions of the nature of inter or intra. It will be, of course, intrastate supply of goods and services, because only one state is involved here. And rate of GST is 12%. So this will comprise CGST at the rate of 6% and SGST at the rate of 6%. So both will make to 12%. 12% of 5,000 would amount to rupees 6,000, in which CGST would be rupees 3,000, SGST would be rupees 3,000. So 3,000 would go in the hands of central government and 3,000 would go in the hands of the state government. So in the earlier one, the transaction was interstate, and in this part, the transaction is of intrastate. That is why CGST and SGST, and in the earlier one it was SGST. So now the different taxes which were before the implementation of GST. Of course, you must be knowing that there was excise duty, duties of excise, additional duties of excise, additional duties of customs, state VAT, central VAT, purchase tax, luxury tax, entertainment tax, entry tax, taxes on advertisements, and taxes on lotteries, betting and gambling, of course. Now, CGST, SGST and IGST have replaced all these taxes. However, certain taxes as the GST levied for the interstate purchase at concessional rate of 2% by the issue and utilization of Form C still prevalent, which means that if the transaction of sale of goods and services is being made by using the Form C, as it was earlier made in value added tax, so the tax rate would be of 2%. Like the normal tax rates are 5%, 18%, 12% and 28%. So if the dealer is making use of Form C, this rate would be reduced to a concessional rate of 2%. By using the Form C, he can show and to the government, and government will reduce the tax rate to concessional rate of 2%, but GST would be levied. It applies to certain GST goods such as petroleum, high-speed diesel, motor spirit, natural gas, aviation turbine fuel, alcoholic liquor for the human consumption. But it applies only to the following transactions: resale, use in the manufacturing processing, use in certain sectors such as telecommunication network, mining, the generation or distribution of electricity or any other power sector. During the GST regime, every purchaser, including the final consumer, paid taxes on tax. This condition of tax on tax was earlier known as cascading effect, which after the implementation of GST has been removed. It was basically done under VAT regime. If there was VAT on VAT, that is tax on each and every value addition. Now GST has all removed all these cascading effects and brought transparency in the Indian economy. So I hope so. This till now have been made clear to you, that is what is GST, definition of GST, nature of GST, coverage of GST, like different taxes before implementation of GST. Also the illustration which made you clear regarding the different components like CGST, SGST and IGST. So moving further with the topics, return filing, as I told you that the main coverage for GST demo lecture would be the GST return filing. What is GST return filing? As the different manufacturers and the dealers who are dealing in the goods and services have to file the returns, that is basically it is a tax compliance which is required by the government of India for the manufacturers and the dealers who are dealing in those goods and services. For these, they have to mention and furnish all the details in the form of a summary, and each and every kind of details required to be mentioned in these returns for making the compliances on time. Because if these compliances are not made on time, there will be heavy bearing of penalties and interest charges for all these dealers and manufacturers, the impact of which is to be bared by these manufacturers and the dealers. So I'm explaining you the different kinds of returns, the name of the return and why it is required to be filed, and by which due date it will be required to be filed. So to start with, first of all, I am taking GSTR1. What is GSTR1 return? GSTR1 return is a return which is to be furnished, which mentions the details of the outward supplies of taxable goods and services. Now, what is outward supply? Outward supply is that the sale being made by the dealer who is dealing in goods and services, either in one state or in more than 2 states or more than 3 states. It depends on the dealer in which he or she is having GST registration. Of course, GST registration is a process which is required to be done before filing of the GST returns by the manufacturers and the dealers. Before making those compliances, GST registration has to be taken for each and every state in which the dealer has to make those transactions of dealing in goods and services. So GSTR1 is a return which furnishes the details for the outward supplies of taxable goods and services. That it is, in short, if you want to understand the nature of GSTR1, you need to understand what is GSTR1. In short summary or synopsis I can give you, it is a return which is providing the details of the sales made by the manufacturer or the dealer. That is, it shows all the transactions of the sales. Now, what is GSTR2? Right now, there is no due date for furnishing of GSTR2 because earlier there were notifications being coming, but right now it is suspended from September 2017 onwards. But in order to understand what is GSTR2, it is providing the details of inward supplies of taxable goods and services which affects claiming the input tax credit. Now, what do you mean by input tax credit? That I will take in the later on session, but right now it is to understand that is what is GSTR2. GSTR1 is related with the outward supplies of taxable goods and services. So GSTR2 is related with the inward supplies of goods and services. Outward and inward means outward is related to the sale and inward is related to the purchases. So GSTR1 will show the entire details with regard to the sales, and GSTR2 will show the entire details with regard to the purchases. Right now I am only explaining the nature of GST returns, definition of GST returns. In the later on, when we will move further, we will explain the due dates for filing of these returns. Now, third one is GSTR3. Again, GSTR 3 is suspended from September 2017 onwards. But to understand a little bit definition of GSTR 3, you should always remember that GSTR 3 is a monthly return on the basis of finalization of the details of outward supplies and inward supplies along with the payment of taxes. Now in GSTR 1, we have provided the details with regard to the sales. GSTR 2, we have provided the details regard to the purchases. Now GSTR 3 will contain the details with regard to the sales also, purchases also, and the payment of total taxes on all these transactions. Okay, so I hope so till here it is being completed for GSTR 1, GSTR 2 and GSTR 3. GSTR 1 is supply, GSTR 2 is purchases, and GSTR 3 is supply and purchases, both providing the monthly details of GSTR 1, GSTR 2 and payment of taxes. Now the duration for which it is to be filed, like on monthly basis or quarterly basis. So GSTR 1 is basically a monthly return and quarterly return, both. Why? Because it totally depends upon the turnover of a supplier who is dealing in the goods and services. Because in case if the turnover of the supplier is up to 1.5 crores, he has been given an option to file a quarterly return. And in case if the turnover of the supplier or the manufacturer, of course, who's dealing in the goods and services is more than 1.5 crores, then in such a case, the person has been given an option to file a monthly return. So GSTR 1 can be filed either monthly also or quarterly also. How monthly, how quarterly, it has been decided totally on the threshold limit basis of GSTR 1, that is, in case if the total turnover of the supply is up to 1.5 crores, then quarterly return. More than 1.5 crores, then monthly return. Due dates for filing I would cover later on. First of all, I am only explaining, as I told you earlier, the basic GSTR returns definition. So GSTR 1 is a monthly or quarterly return option given to the supplier. Now GSTR 2, again the definition is being cleared to you. Again it is a monthly return, but right now it is not being filed because it is suspended. Third, GSTR 3, again if it will come or notified by the government, it will again be a monthly return. Now moving to the next topic of my GST return session is the most important topic, GSTR Form 3B. First of all, as GSTR 3 is not being in line right now, GSTR 3B is to be filed by the manufacturer or the supplier who are dealing in the goods and services. Now GSTR 3B, what is GSTR 3B? GSTR 3B is totally a summary return providing the details of the outward supplies and the inward supplies. Outward means sales, inward means purchases, and also the payment of tax details and also the claiming of input tax credit. Right now I am not covering the topic with regard to the input tax credit. Slowly we will move to that, but before that, these are some basic important terms which are to be cleared right now. So GSTR 3B is a summary return containing the details of the outward supplies and the inward supplies. And also outward means sales, inward means purchases, and of course the payment of taxes, like total tax to be paid by the dealer or the manufacturer, and of course the total tax credit which shall be required to be claimed by the manufacturer. Again, it's a monthly return to be filed. There is no such option of quarterly or monthly, only monthly return to be filed by the supplier or the dealer who is dealing in that goods and services. Okay, moving next, GSTR 4. What is GSTR 4? It is a return for the taxpayer who is registered under the composition scheme under section 10 of the CGST Act, that is supplier of goods, and CGST rate notification on 2nd 2019 dated 7th March of 2020, supplier of services. So basically, in short, if you want to understand this return, you should always remember that it is a return which is required to be filed by a taxpayer who is registered under the composition scheme of the CGST Act. We will later on discuss what is a composition scheme, but right now only the basic definition which I can provide you is the return to be filed by the taxpayer who are registered under the composition scheme. It is a return which is to be filed on annual basis, not monthly basis. Next, coming GSTR 5. What is GSTR 5 now? It is a return for a non-resident foreign taxable person. That is, non-resident means, as an income tax, you must be aware that there are three terms: resident, ordinary resident, resident not ordinary resident, and non-resident. There are different conditions which a person needs to fulfill for claiming the status of all these three. So non-resident means a person who is not residing in India, that is a foreign taxable person. When a foreign taxable registered dealer has to furnish the return, he has to furnish the return for GSTR 5. GSTR 5, again, it is a monthly return to be filed on monthly basis. Next coming is GSTR 6. GSTR 6 is a return to be filed for an input service distributor to distribute the eligible input tax credit to its branches. That is, sometimes whenever a business enterprise is doing the business, can have a head office also. As in financial accounting or corporate accounting, you must be aware of these two terms. One is head office and the other is branch. Head office sometimes can make the expenses on the behalf of branch, and sometimes the branch can bear the expenses on the behalf of head office. So it is a return for an input service distributor to distribute the input tax credit claimed to its branches. Input tax credit will be covered, but on later on basis. Right now it is only to understand it's a return to be filed by an input service distributor on monthly basis. Okay. Next, GSTR 7. GSTR 7 is again a return for government authorities who are deducting tax at source. TDS, that is tax deducted at source. In income tax, I think so you must have been studied all these terms. That is tax deducted at source. Again, it is required to be filed on monthly basis. Next, GSTR 8. It is providing the details of supplies which are effected through the e-commerce operators as the amount of tax collected sourced by them. Now, what do you mean by e-commerce operator? That is the transactions which are made online. If the details of that is the transactions for sale and goods and services are made online, that is through e-commerce operator. It is a return which is to be filed by those dealers, that is GSTR 8 on monthly basis. Again, a new return, GSTR 9, has now been implemented in full form, that is GSTR 9. It is an annual return to be returned and filed by a normal taxpayer. Annual return means containing the details with regard to the whole of the financial year. Right now, I can tell you for financial year 2018 and 19, the GSTR 9 is to be filed on 31st of December. That is, as the name suggests, annual return, it is to be filed on annual basis. Okay. Next is a GSTR 10. GSTR 10 is a final return to be filed by a taxpayer whose GST registration has been cancelled by the government. That is, when the government cancels the GST registration, it is the final return to be filed by a person, that is a taxpayer whose GST registration has been cancelled. Okay. So it is a return which is to be filed when the GST registration is cancelled or it is surrendered. Next, moving GSTR 11. It is a return showing the details of the inward supplies. Inward supplies, as we have already discussed in GSTR 2, that is purchases, to be furnished by a person having UIN and claiming a refund, to be filed on monthly basis. To be filed on monthly basis. Okay. So there is also a late filing of a GST returns topic which will be covered. Right now, as I can tell you that there is a interest and the late fees which is to be paid when the GST returns are not filed on time. Interest rate is at the rate of 18% per annum, and the late fees is ₹100 under CGST Act and ₹100 under SGST Act. So total per day the default continues by the taxpayer. Total ₹200 per day will be levied as a penalty or late fees by the government on the taxpayer, and the taxpayer has to make that part, because until and unless he will not make the payment of the taxes on time, the compliance will not be made on time, subject to a maximum of ₹5,000. As suppose the total penalty comes to ₹8,000, by calculation made at ₹200 per day, the default continues, but the subject maximum is 5,000, that is not more than 5,000, the penalty and late fees can be levied by the government of India. There is only late fees on the CGST and SGST. that is rupees 100 calculation based, but there is no late fees on IGST till now, whatever rules have been notified by the government of India. So I think so late fees and interest has been cleared to you. Interest at the rate of 18% and late fees rupees 100 under CGST and rupees 100 under SGST. Now moving forward, I'll be discussing with you the due dates for filing the GSTR returns, that is different GSTR returns. If I talk about GSTR 1, so I have already told you there's an option to file return under quarterly basis also and under monthly basis also.